guys are doing good. Be back with another video, and today we're going to be looking at Euro USD from the monthly time frame. I'm sure by now you guys are aware that at MMK Forex Group we combine supply and demand with BTMM, right? Simplified. Alright, so looking at Euro USD, remember I always want to understand where price is coming from, and it's very clear to see that this was where our peak was formed. This was actually a supply level which was formed, and as you can see, as price continued moving to the downside, these were areas. This is a demand area, this is a demand area, this is a rally base rally demand area, right? So as you can see, as price pushed away from this peak formation, we had a structure breaker, right? That structure breaker being a lower low, that structure breaker being a lower low, and as you can see, price went back towards our supply zone. But on this time frame, you will not see anything on the left, but if you can go to the weekly time frame, you will be able to understand that we had hidden base over here. This is what we call hidden base. This area, we call it hidden base, or some people might call it the kink, right? So as you can see, when price engulfed that area, let's go back to the monthly. When price engulfed this area away from this supply zone, this supply zone becomes very important, because this was the reason why this was taken out. This was the reason why there was a change in structure. So this is the first signal that you'd see, this is the first signal that you'd see, or that will tell you that there's a change in the market structure. Remember, the market structure is always important, right? So for those guys who trade BTMM, I'm sure it's very easy for you to understand that from this peak formation, remember this is the monthly time frame, so these demarcations are actually demarcations of the year, right? This is a whole year of trading activity, and as you can see, same thing. We had a false move year beginning, right? A trap at the supply zone, and as you can see, you can actually count 1, 2, 3, and on this third strike, this is where the structure was broken. As you can see, this was the first sign that was going to indicate that there's a change in structure. Then from there we went back to that supply area, so this also becomes the supply area. Why? Because the fact that this supply zone held this supply, or the fact that that supply zone held price here, makes it a demand area. Now as you can see, we had a bearish engulfing there, which is a very interesting candle when it comes to, you know, momentum, or where the orders are stacked, right? As you can see, a nice bearish engulfing candle. Then from that area we pushed, right? So this area was responsible for breaking the structure. As you can see, we had another structure breaker, giving you another lower low. So this is already telling you that there's a change in structure, right? There's a change in the market structure. So from there, same thing happens. Price will retrace back to the base. Remember, this price was held, and this price also acts as our supply zone, and then from that area we had a move down. As you can see, this move down did not take out this demand area. As you can see, we had a reaction there, right? But as you can see, price retraced to another supply zone. As you can see, we've got hidden base right there, right? If you go to the weekly, it will be, there you go, we had another supply zone at this area. As you can see, that is where price pushed to, with a very good price approach back to that area, and we then broke this structure. All this structure was taken out by this move, right? So we can just say this demand area was taken out, and as you can see, there were multiple touches around this demand area, right? So this base weakened, right? We call this weakening base, right? Finally it was broken, right, away from the supply zone. So as you can see, we've got another trap, right? We've got a lower low, right? And price is still in that drop phase, right? So as you can see, we had hidden base there, and that is where price retraced to and reacted. As you can see right now, price did not manage to break this demand. As you can see, the same demand, this is where price came back to, right? So when you're looking at it from this perspective, it will be very easy for you to understand that price was reacting to this area. Price was reacting to this area. Remember, that also becomes a supply area. As you can see, this supply zone right here, we had a drop base drops, this being the supply zone. So as you can see, look at that, right? Some powerful stuff that we have at that supply zone. right? So these are the areas that you should be keeping an eye on for entries, right? As you can see, so we've got a good structure there. Our demand is all the way down here, right? Our demand is all the way down here. So if we take it back to the monthly, right, and look at it from our BTMM perspective, you'll find that these structure breakers, most of the time, this is where the traps will happen. As you can see, if you look at this area, right, we had a trap, as you can see, below the 50, right, we had a pullback, and then we had another trap at the 200 EMA, right, and then we had a pullback, as you can see, another trap here too, we had another trap there, right, and we also had a trap below the 800 EMA. So this is where the traps happen. So if you can understand where your demand areas are, because if you look to the left, these are still demand areas, rally base rally, so there we go. So this demand held, so price was held on this demand, but as you can see, if price respects this supply zone, then we can expect this area to be broken, right? Unless the structure changes, where you will start seeing higher highs, then we'll start focusing on areas like these, right? These are areas of interest, right? But at this point, you can see we've got a nice move. If you take it down to the daily, this is what we have, right? A nice reaction at that supply zone, right? So you can see if we go to the 4-hour time frame, so we understand the structure first. So what do we have, right? This is what will make it easier for you when catching peaks on BTMM. So what do we have? We've got price giving us a first leg, reacting to that supply zone. Right now, what do we have below that? We have got, remember, as price was moving up, we had a rally base rally. That rally base rally demand area was engulfed. As you can see, we've got a lower low, right? So this is confirmed. This is confirmed, right? You've got a lower low, and price will move back to your supply, right? Remember, this supply was created right here. This is where your supply was created. Remember, here's another engulfing pattern. Very interesting pattern there. What happened? Price reacts and then price drops. But if you're going to look at it from a BTMM, let's go to the 1-hour time frame. This is what we'd have, right? Very interesting stuff, right? First leg, right? And the trap that broke structure, as I said, is below an EMA, below the 50 EMA, right? I hope you guys are catching on to that, right? This is where the trap happened. But I know a lot of people were shorting there. Yeah, it happens. But as you can see, you can even count 1, 2, 3, and then he hits it. Right, when he hits it, he breaks structure. Some people are short right here. Now this is what will happen to people. Let's go to the 15 minutes time frame. Right, they'll take the first leg. Right, you take the first leg, you look at this, a very good peak formation, and then you're short. Right, you're over leveraging, and then guess what? The dealer takes all those profits away. Right, so if you want to be a sniper trader, then it would be good if you consider taking your trades at base areas after structure has been broken, because you can see that's what happened right here, right? That's what happened right here. After structure was broken, price went back to our supply zone where the orders are, and then you can enter your trade, have your stops above the zone, 18 pips, and yeah, I mean, look at that, right? Very good amounts of pips, right? So if you're going to look at it from a BTMM perspective, right, if you look at your TDI, this is what we have, the first leg, right? And then we've got some very good look at that, right? Very good divergence there. There was like a market baseline bounce above. It's a trap above it, but which is good, right? As you can see, the relative strength of TDI is telling us that this is moving to the downside, right? So from this day, this was a nice level. That level also broke structure. If we look at it from a clean chart, this is what we have, right? This structure pushed down to the previous rally base rally right here. See this area where price did respect. As you can see, look at that momentum, those candles, right? Price respected this decision point or this demand area. Then structure was broken again, right? Structure was broken. There you go. Got structure being broken, right? Look at that. All that below that area is a trap, right? Where you should be interested in taking a trade, if you go to the 15 minutes time frame, where is this? Okay, I cannot move back, but where? Okay, right here. As you can see, so if you zoom in, right, you can see that this is a supply area which was created. You might not see it here, but if you move to the shorter time frames, you would be able to see, right? But right here we've got a nice area there, right? So what happens? Price is broken again, right? Price gives you a signal, structure breaker, and then price moves back to your supply, and then price moves away. Right now, the risk to reward on these types of trades are amazing. Right, so you'll be risking 13 pips above the zone, and you made over 100 pips. It's not that easy though, but if you understand the structure, right, and keep it simple by all means. So if we go to the 15-minute time frame, look at that. This trade where price moved at was actually a trade on the 200 EMA after a 50-200 crossover, after a 1350 crossover, confirming the lock of this peak. This was a very, a very good trade. This was a very good trade for you that you would take. As you can see, it's actually trapped above the Asian box, right? 37 pips Asian range, right? He traps both sides, 1 2 3, hits it, pulls it back. You're not falling for this, right? You're not falling for all that. You're looking for something above. But what's interesting is this something above is actually a supply zone, right? Where you're looking at this, right? Knowledge on this is very important. There you go. This is where the orders were, right? And then you had a very good amount of pips. If you catch it there, that day you had over 81 pips to bag. If you are still holding today, you'll be over 125 pips. So the most important thing here is understanding your structure and following the market structure, right? Following the market structure, because some people I know took this first move and they blew accounts. They blew accounts, right? So this was very interesting. If you look at it from the H1 time frame, what you're going to find is this was a very good peak formation, right? We had a first day of drop, good, and then I love seeing this in the 1 hour time frame, right? I love seeing this in the 1 hour time frame. What do you have? You've got a nice day of drop, a long sustained drop, right? A 1350 crossover. What does a 1350 crossover mean for us? It tells us that this peak formation has been locked, right? And then we had the first move, a trap around that 200 EMA. Look at that, look at all that, right? This trap. People got trapped over there, right? And then yeah, as you can see, after a 1350 crossover, you should keep an eye out on the first pullback to the 50 EMA. There you go. Here's your ID 50 or your 50 bounce in the H1. This was a nice trade that paid out. As you can see, this is a nice BTMM trade that played out, but you still find people saying BTMM doesn't work. But yeah, there we go. A very clean trade. This week, or I think this was last week. Oh, is it this week? I think this was last week. Today is 11th of January. So this was, yeah, it was last week, right? So this week, so this means if this is Monday, this was Friday and Thursday. So on Thursday, you had the opportunity to catch the peak. If you missed the peak, you had another opportunity to catch the ID 50, right? This is a high probability trade, right? But the most important thing here is understanding your structure. Understand your structure, right? So at this level, you should be interested in this area. This is a demand area, and look at all those rejections. This is where price is heading now. And the rest is history. Follow the market structure. So if you're looking at it from the 4 hour time frame, let's look at our TDI. Amazing stuff, right? A nice peak on that market baseline, right? This was the midweek reversal, and all you had to do was trade away from that, right? All you had to do was trade away from that. So I'm interested in this area. I'll watch what will happen here, right? And then I'll make my decision there. I'll watch what will happen there, but whatever happens, I will follow structure, right? I hope you learned something from this, and the importance of understanding your base areas. So yeah, at this level, I'm looking at these areas, right? And I'm also going to count my levels, right? Remember, levels are very important. Here's a clean chart. This is a nice demand area. Look at all those reactions there. So this base is actually weakening, right? So I'll see what will happen here, and then already I would mark up these areas. These are new demand areas which were created by the market. There you go. It's very important for you to know these areas. This is also another interesting area which was created, right? So I'd be watching these areas, right? I'd be watching these areas, right? and see what will happen there, right? But so far you had a very good opportunity to enter on your USD. With proper money management, you could make a lot of money. This is what you're looking for, right? You're not looking for everything. You can trade everything, but if you want to see good results, you need to be very selective, right? That's where the trick is. Be selective. So this is the power of multi sessions. This is the power of multi sessions. You see a nice peak was set during Asian session, right? And towards the end of Asian session, we're 1350 crossover. Nice pin bar, close below 13 EMA, and we headed for the day, man. You were going to risk 14 pips above structure, and you hit over 70 pips. If you had a good target, you'll be okay. So what happens that day is we have a 5200 crossover, right, which is good, right? The next day we were expecting this, right? We were expecting this. So you can take it here when you look at it from our supply and demand, but if you're more conservative, you can wait for this. Let's look at it from this, right? You can wait. Where was that trade? Yeah, right here, as you can see what happened. We had structure being broken. Right? Structure was broken. First sign. So structure was broken. I think it also broke this previous structure. Yep, that structure was broken. Do you see that? That structure was broken right there, and price came back where? To the supply zone, which was created as price was moving down. But you need to know how to select these areas, right? So that's what we have right here. You had a nice area. So if you looked at it around this area right here, right, you see we've got a rally, base, rally. That area was also engulfed. Look at that, right? We've got a structure breaker, and price moves back to the supply area which was created, as you can see, and then we continue going down. So this was more conservative, right? Because if you look at it, we've got a nice close below 13 EMA. There you go, a nice close below 13 EMA, and you had the opportunity to risk. You would be risking over 23 pips, and you went for 50, right? If you held, you'd be in profit. So it all goes with your money management, right? But understanding supply and demand will make it possible for you to enter this trade there with very little risk, just by understanding where your decision points are. But I hope you've understood my process. Never forget what's happening in the higher time frame. We are at the supply zone, right? We are at the supply zone. Anything can happen, right? This can decide to continue going up, right? Remember, we don't want to predict price too much. We want to react to what the market structure is telling us, right? The market structure is the king, right? It will tell us, right? It will tell us, and then all we have to do is wait. Remember what I said, Forex is actually 15% buy, 15% selling, 70% waiting, right? The waiting game. That's where a lot of people fail, right? But if you know what you're doing, right, you'd be able to wait, knowing that you're waiting for high probable trades, right? You're waiting for trades with the high probability of playing out, right? Those are the type of setups that you want to put your money on, right? You cannot just trade everything. Be very selective, right? Be very selective. Know the setups with the high probability of playing out. Wait for them, right? Do not force them, and follow your rules, right? It might not happen every week or every day, but when you trade, you know you're making money. At the end of the day, it's all about being consistent, right? So even though you lose, you know that you're managing your risk well, right? But in a trade like this, you're going to expose yourself to not more than 20 pips, right? And this played out. Look at that, over 184. That makes sense, right? That makes sense for you to wait for, right? That makes, well, of course you can scale in. You had made a lot of pips on this, but understanding your structure, because a lot of people, I know, when they saw this, they were probably selling there, looking at those big candles, they're selling, and you already know what happens. You see this, what happened that day, right? Look at this. The reason why I'm saying after 5200 crossover, you must expect a trade on the 200 EMA is, look at what happened this day. I mean, this looked good, right? This looked good. This was like a bounce. I mean, here's your 5200, here's your 5013 crossover, and here's your ID50. around that area was your peak supply zone. So some people would have taken these trades, and look at that, there you go, 1 2 3, he hits it, right? But that was like 44 pips. So if you know how to manage your money well, I mean, those are good pips. But what happened? The dealer had to come and hit the stops at the 200 EMA, which makes this a very interesting trade, right? So even if you take such a trade once or twice in a week, you are consistent. That's the whole point, right? That's the whole point. I hope you guys have learned something from this video. Do not forget to hit that subscribe button and turn on that notification bell icon. And don't forget to subscribe, share with your friends. Money is the serve.